Hello and welcome to your updated market wrap for the Australian stock market on March 30th, 2026. The S&P ASX 200 ended today's trading session down 0.65%, closing at 8,461 points amid mixed global signals. Investors navigated a landscape shaped by persistent rate hike fears and significant commodity fluctuations, leading to a cautious mood throughout the day. Overall, decliners clearly outnumbered advancers. Turnover remained steady, yet profit-taking was evident, particularly across the tech and financial sectors. Broader indices like the ASX 300 mirrored these moves, as defensive sectors provided a much-needed buffer against more aggressive declines elsewhere. In contrast, standout performers today included the mining and energy giants, which capitalized on positive commodity sentiment. Fortescue Metals Group led the charge, climbing over 1.78% after releasing strong iron ore sentiment data and optimistic production updates. The mining giant continues to benefit from robust global demand, particularly as infrastructure projects in Asia maintain steady consumption of Australian ore. BHP Group also rose about 0.12%. While the gain was modest, it was buoyed by significant strength in copper prices as the green energy transition accelerates. Copper remains a key focus for investors, with BHP's diversified portfolio providing a hedge against the volatility seen in other segments of the market today. Moving to the smaller end of town, Middle Island Resources stole the spotlight, surging a massive 24% on the back of extremely positive drilling news. The market reacted strongly to their exploration breakthroughs, which suggests significant potential for their current projects in the coming year. Renegade Exploration also jumped sharply. Like Middle Island, their gains were driven by significant exploration progress that has caught the eye of speculators. These small-cap surges highlight the high-reward nature of the exploration sector, even on a day when the broader market was feeling the pressure. On the flip side, consumer discretionary stocks faced significant headwinds today as concerns over household spending began to weigh on sentiment. Lendlease was among the hardest hit, dropping around 3.58%. Investors are reacting to project delays and a broader slowdown in construction activity. The property giant has been navigating a complex environment of rising costs and logistical hurdles, which continue to impact its short-term outlook. Qantas Airways also slipped 2.01% today. The national carrier is battling rising fuel costs and ongoing concerns regarding its capacity and service delivery. Rising oil prices are a direct threat to airline margins, and traders are keeping a watch on how the flying kangaroo manages these escalating overheads. In the technology space, Xero fell 3.21%, largely tracking the pullbacks we've seen in the NASDAQ over the past 24 hours. Australian tech stocks remain highly sensitive to global sentiment, particularly the movements of the U.S. tech giants which set the pace for the sector. Volatility hit penny stocks hard across the board today, though the larger blue-chip companies held relatively firm in comparison to their smaller counterparts. This flight to quality suggests that while investors are taking profits, they are still keeping their capital in established names with strong balance sheets. The sectors showed a clear split today. Materials led with a strong 1.27% gain, while utilities rose 1.40% as a standout defensive play. The rise in utilities reflects a broader trend of investors seeking safety in essential services as economic uncertainty continues to cloud the horizon. On the downside, financials took a heavy hit, dropping 2.23%, while information technology plunged a staggering 3.16%. The banking sector is feeling the heat of potential rate hikes, which could squeeze margins and slow down lending growth in the coming months. Healthcare slipped 1.31% amid a lull in biotech news, and Australian real estate investment trusts, or A-REITs, declined mildly by 0.70%. Without major clinical trial results or mergers to drive excitement, the healthcare sector drifted lower in sympathy with the broader market trend. The energy and consumer staples sectors remained cautious, showing less volatility than their tech and financial counterparts today. Notable volume spikes were seen in Yancoal Australia and Woodside Energy, both of which ended the day up modestly. Traders are increasingly focused on LNG demand talks, particularly as global energy security remains a top priority for governments around the world. Woodside's recent moves have positioned it well for this shifting landscape, making it a key name for those looking to play the long-term energy transition. Looking ahead, all eyes are on the upcoming RBA commentary and crucial U.S. economic data for further market direction. Traders are desperately searching for any signal of a potential rate cut, as the current high-interest environment continues to test investor resolve. Until we see more clarity on the inflation front, expect this risk-off tone to remain the dominant theme in the Australian market. Thanks for tuning in to today's wrap. Stay sharp, do your research, and we'll see you for another update tomorrow. Trade wisely and have a great evening. Goodbye for now.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.